Michael Burry, someone who is famous for predicting the housing market crash of 2008, has gone all in on economic collapse within America, and he seemingly thinks that a widespread recession and a further stock market crash is coming soon. Today I'll be taking a look at the stocks that Burry has recently sold and also bought, as well as the main reasons why he believes that a big recession and a stock market crash are ahead. So, Michael Burry has sold everything. Now, every quarter, hedge funds and financial institutions from the US do have to release their 13F filings, which showcases which stocks they are holding, as well as which stocks they have bought and sold throughout that quarter. Now, this is great for onlookers because it allows us to see investing activity from the world's biggest and most successful funds and investors, allowing us to get an insight on where they believe the market is heading in the future. So, Michael Burry's hedge fund, Scion Asset Management, released their filing last week, and the portfolio activity is very interesting but also rather alarming. So Michael Burry has sold out of nearly his entire portfolio and now owns just one single stock that he bought last quarter. Now this is quite an astonishing thing to see because it means that Michael Burry sold out of 11 different stocks, including some big names like Google, Meta, Warner Brothers, Booking Holdings, and also Bristol Myers Squibb. So there is quite a wide range of high market cap, high quality companies that he has sold out of there. So he did also sell out of his Apple put option position as well, which is quite strange to see if he is bearish, but maybe this was always intended to be the case, and it was just intended to be a short-term position. But to put this into a bit more perspective, Burry did hold over $200 million worth of stocks in Q1, but has now cut that down to just $3 million, meaning that he has essentially sold out entirely of his previous portfolio worth $200 million. So it gets even more interesting and also concerning when you actually take a closer look at the only stock remaining in Michael Burry's portfolio, which is the GEO Group or the GEO Group. So the GEO Group is a US-based company investing in private prisons and also mental health facilities, and it's also a small cap stock that has a market cap of around $1 billion, or just under this actually. But Burry has never held this stock before, and even though he does own it now, as the only stock in the portfolio, the position is only worth about $3 million, which is quite small relative to the size of Michael Burry's fund, especially considering it was worth $200 million in the last quarter. Now, Michael Burry has tweeted criticism in the past about the police force and also how hate crime is increasing across America. So he clearly thinks that the US is heading in a negative direction, in which we could see crime increase. Now, with many people struggling due to the cost of living, and speculation around the situation only getting worse, where it could potentially spiral into economic collapse, Michael Burry clearly anticipates an increase in civil unrest across the US. Now, if this is the case, then demand for prisons and mental health facilities is likely to rise and also benefit companies like the GEO Group. So Burry has also recently tweeted about his thoughts on private prisons versus the federal prisons, and also how private prisons keep their prisoner to security staff ratio at 9-1, which is a bit better than the 10-1 ratio at federal prisons. And he's also stated that private prisons have a higher ratio of prisoners in community-based programs compared to public. So the fact that Michael Burry closed out his Apple put option position last quarter, but didn't add any additional put option positions, is also quite an interesting thing to see. So maybe Burry thinks that markets are so irrational nowadays that there is no guarantee that the stock market won't continue to rip higher in the coming months or so, which could render his put options worthless just simply by bad timing. Now, alternatively, he may hold standard short positions within his portfolio that we are not aware of, as these positions don't need to be reported in a 13F filing, or maybe he's quite simply all in cash. Now, this would be the safest asset to hold during periods of high volatility, and at least this way, Burry can protect investor capital from damage that poorly timed put options could bring. And at the same time, this allows him to pounce with lots of dry powder when stocks get to a more attractive valuation further in the future. You only really have to follow Burry on Twitter to get an insight into his thoughts on the current state of the US economy and also the stock market. And many of the things that he has spoken about over the past couple of months are probably also reasons why he has decided to sell out of almost his entire stock portfolio. So Michael Burry often does make quite bearish tweets, and generally has a very bearish view on all things to do with the economy, especially in the last few months or so. So I have picked out a few of his tweets that he's made in the past that I thought were especially interesting to look at. So this first one was tweeted on the 11th of August, and it does say, "Nasdaq a bull market because it is up 20% off its low? Who makes this stuff up? After 2000, the Nasdaq did that 7 times as it fell 78% to its 2002 low." So Michael Burry clearly thinks that this recent surge in the stock market that we are seeing off the lows that we saw earlier is simply a bear market rally, and that it will not sustain into transitioning into a bull market again. On the 14th of August, he then did tweet, "The S&P 500 completed a 22% 2-month rally and the Nasdaq a 43% rally. The S&P 500 would fall another 42% and the Nasdaq another 48% by the bottom post-WorldCom in late 2002. May 21, 2001. Can't shake that silly pre-Enron, pre-9/11, pre-WorldCom feeling." So again, Burry is simply stating that he thinks that the recent rallies in the market are not justified and are likely, in his opinion, to retrace back down to below the previous lows that we saw a few months ago. And again, he does liken the situation to the dot-com bubble as well. Then on the 15th of August, after the market had gone up even more, he then tweeted, "Contrary to the internet and the Twitter sphere, there have been bear market rallies that eclipsed 50% retracement and led to a lower low." And then he's listed some dates here as well. So again, he's simply saying that this bear market rally that we could be experiencing is something that is quite normal, even if it does go past that 50% retracement, which we have recently seen. So those were a few examples of why he thinks that this recent rally in the stock market is simply a bear market rally. But another interesting point that he has made as well over the past couple of weeks is about the credit balances. So on the 12th of August, which was obviously a few days before those recent tweets, he did say, "Net consumer credit balances are rising at record rates as consumers choose violence rather than to cut back on spending in the face of inflation. Remember the savings glut problem? No more." And then he's gone on to say that spending is addictive and a winter is coming. And then this chart that he has attached to the tweet is also interesting to look at, and it does show the trend in US consumer credit surging into the tightening cycle. And then especially from 2020 onwards, you can see that this surge is even steeper compared to any previous point. So on the topic of debt, we can definitely see a rather sharp increase in both housing debt and also non-housing debt on this chart on the screen now. So housing debt is generally considered to be a fairly good debt to have in some ways, because it is usually attached to a low interest mortgage for a house. Now, houses are appreciating assets that historically have gained value over time. However, non-housing debt is more problematic and usually comes in the form of a higher interest rate loan, and these loans are used for more unnecessary purchases. So looking at the breakdown of this debt, we can see that a lot of it is being used for auto loans, student loans, and also credit card debt. So many people do buy cars that they can't really afford, and they end up with a really high auto loan for this car that they have to pay a fairly modest interest rate on as well. So you could argue that financially they would have been better off buying a cheaper car that they can either afford to buy outright, or they have to take out a much smaller loan on this to simply avoid paying the higher loan repayments. Now, credit card debt is arguably the worst type of debt to have, as this credit card debt does normally have extremely high interest rates on it. And if we look at this on the chart, it has risen slightly over the last 10 years, meaning that people are still generally spending more recklessly now compared to what they did back then. So it's definitely not a good thing to see consumer debt going up for both housing and also non-housing debt. And going back to what Michael Burry did say in his tweet, he does believe a winter is coming. So whatever you think that could mean, that's up for interpretation. So that is all for today's video on the recent events surrounding Michael Burry and his portfolio. Now, Michael Burry is obviously someone who is quite well known to be a very bearish person, and because of that, some people don't always take what he has to say seriously because he is always bearish. But with that being said, he obviously has made some very good calls in the past, especially in the 2008 global financial crisis with the housing market crash. So I do think that it is definitely some value to take from looking at what he is actually doing in the market, as well as some of the things he's tweeting about and problems that he does see. It's especially interesting to see, in my opinion, that Michael Burry is really putting his money where his mouth is, and when he said he's bearish on the stock market, he really is showing it now by fully selling out of his stock market positions. But with all this being said, guys, this video is purely based on my own research and my own opinions. I am not a financial advisor, and this video is not financial advice. It is purely for entertainment purposes only. But if you did enjoy the video, please be sure to leave a like, as that does help out a lot. Also be sure to comment as well. What are your thoughts on the current Michael Burry portfolio and what he's been tweeting about? I'd be really interested to listen to that. Also be sure to subscribe as well if you want to see more videos similar to this in the future. And apart from that, guys, thanks a lot for watching.